forward, what we're going to look at is a 6-step process that we're going to employ in order to put an individual disability policy in place. So the first step that we're going to undertake here is we're going to, as we should with all insurance products, determine the need for disability insurance. So we need to establish the need, figure out how much disability insurance this person is going to require. The next thing that we're going to look at is we're going to look at the underwriting considerations. Really, we're going to look here at what we refer to as morbidity. Morbidity refers to the likelihood of becoming disabled at a given age. And the biggest concern with morbidity, the big concern for disability insurance, what does this person do for a living? What is their occupation? Once we've established the morbidity for this person, now we're going to go on and we're going to look at definitions of disability. So we need to find out how we consider this person disabled for the purpose of their particular disability insurance policy. Once we have a definition in place, the next thing that we're going to do is we're going to determine the type of contract. I'll get into this more, but we have different ways we can structure the contract. And we also have different ways here that we can pay benefits. So we need to set a benefit period. We need to know when and for how long benefits will be paid. And the final step we're going to take, our 6th step in our process, would be to add riders, waivers, and benefits to our policy. And once we have these riders, waivers, and benefits in place, now we have a complete disability policy. So we're going to work through these now, one step at a time, starting with the need for disability insurance. So in order to establish the need for disability insurance, the first thing that we're going to do is we're going to look at this person's income. Now, income could come from any of a variety of sources. We touched on this already a few minutes ago, but now we're going to go into more detail here. So we could have employment income, for example. In addition to employment income, we might have investment income. Two fairly common sources of income. I would include in investment income things like income from a rental property. Very similar to investment income. We might also have a bonus paid as a result of employment. You might not work directly for a salary. Instead, you might be paid on a commission basis. Many people who work in the insurance industry find that they are able later on to generate income in the form of trailer fees or renewal fees, which is the income earned in exchange for servicing products that are sold in the insurance industry. If you happen to own a business, you might generate some business income. Now, some of you might have noticed that I've broken this down into 2 columns. What you'll see on the left side is what we call active income. And by active income, we mean income that you actually have to get out of bed to go and earn. So you actually have to haul yourself out of bed, go to work, earn this income. The nice thing about the income on this side, on the right side of the chart, is that this stuff is not so dependent on your ability to go to work that day. These would be examples of passive income. There are others that we didn't talk about here. If you happen to be somebody who, for example, helped to write a book at some point, you might generate some royalty income. That would be another source of passive income. Now, you'll see that I put business income in the middle. Well, business income could fall on either side depending on our scenario. If you happen to own a small business, your business income likely falls on this side. That is, if the business counts on you showing up to work every day to help generate the revenues that the business creates, then likely this business income is active income. However, if you're involved in a larger, more robust business and you have, let's say, managers working for you and salespeople working for you and several other folks who work to make sure the business works every day, then likely that business income has more of a passive nature. Now, when we're selling disability insurance, we're going to insure the active income. So this is the income that's insurable. Or, in the context of the Insurance Act, we would say that your insurable interest would be roughly equal to how much active income you generate. So you have an insurable interest in your ability to earn income up to the amount of your actively earned income. Now, that being said, it's not necessarily the case that we're going to insure all of this income.